am by no means ready for this video, but something is happening on Ethereum that I need to show you right now, because as I was prepping to record this video, I saw something happening with ETH on the heat maps, and I want to show it to you live so that you can see what I'm looking at in the moment, which means I had to just hit record without being ready. So I'm going to get straight into it. I want to show you the heat maps on Ethereum. Whilst I'm doing that, you hit that like button, hit subscribe if you're not already subscribed, and let's get right into this alpha because we don't have time to waste. So looking at Ethereum, this is what was happening. If you happen to be watching for the false move week beginning, you may have noticed this prior 4-hour candle that has closed now, and we're now into a new 4-hour candle. What I'm looking at here is a footprint, which is a footprint that sits behind the actual candle, and it shows me the amount of longs versus shorts within the actual candle, and that helps me to identify who the more aggressive trader is at that moment in time. Now, this candle showed me something very, very interesting as it was moving to the downside. What we're looking for here is, and I'm going to point them all out. So number one, when I say we're looking for the more aggressive buyer, when we look at the green versus the red, we're looking for the highest number essentially. And we want to see that if it's going to be a real move, we want to see it towards the bottom of the candle in the case of an uptrend. So we want to see aggressive buyers at the bottom of that candle. If it's going to be a false move, you usually see them, or it's going to be not so smart money, you usually see them at the top of the candle. So we have a bit of a situation right here with this candle, because when we have a look here, look towards the bottom of the candle, the green side was 2.1K, the red side was 4.2. So that means that the sellers, the red side, were the more aggressive traders at that point in time. Then as we went up, it went to 7.2 to 9.4. The sellers were still more aggressive. 16 to 20, sellers still more aggressive. Then it started to change and it went from 23 to 22. So this is where the buyers stepped in and became more aggressive. That's not a bad sign. So all the way up through here, the buyers were the more aggressive traders. Even towards the top of this candle right here, they were really trying hard to push price up. Who can be more aggressive? Market makers, right? Because they have more money. So that could mean that this was a potential false move week beginning. We don't know yet because we need to see the follow through. By the time this video uploads, we would know the follow through. So I'm talking in advance. This is more for educational purposes, but this is a very good sign. The second sign, a very good sign of a false move, I should say, not bullish, bearish. The second sign is down here. When you see the bottom of the candle, we want to see if price is being pushed down by sellers, we want to know where they struggle to continue to push price down. So that means there are no buyers left. And in order for price to continue in a direction, there has to be a buyer and a seller. There has to be someone on the other side of the trade. So as this was pushing down, see how on the green side, that number went to 0. So that means there were no more buyers down here, and therefore the shorts could not push price any further down. That was the best that they could do at that point in time, and that was at about 37.70 at the time. That's when we saw this aggressive push. Now the next candle that is open now is the follow through candle, and this is where we're trying to see, okay, after that move that could potentially be the false move, what's happening now? What is the follow through of this move? And what we can see is price is starting to retrace. The current 4-hour candle on Ethereum is red, so it's retracing back, but we just want to follow the same rule now. So we want to see within this current candle, which, you know, at the time of filming this, it's not even 1 hour into the 4-hour candle. What we want to see is who is the more aggressive trader. And when we have a look at this one now, we can see that the sellers here, so all of these numbers on the red side are for the most part larger than the numbers on the green side. So the sellers are actually larger here, and that can be an argument actually to say, yeah, this was the false move. In addition to that though, we do have buyers below that price currently at around 37.87 to 37.90. Now that could be people wanting to buy the retrace. Okay, so let me show you what this would look like on a chart on a smaller time frame. If we have a look at Ethereum here, so 37.87.5 to about 39 is where the buyers were. So have a look at that. If price were to come back down there, pick up those buy orders and hold. Now that's a range, mind you. So let me just redraw that properly, okay, to be accurate. This is what it would look like. What this could actually do is create a W formation if that were to hold. So we would be looking for something like this to happen, and that would be a sign that this push out to the upside right here, that was was the liquidation. That was designed to liquidate people who open shorts in the consolidation of this area right here. They're probably already gone and the trend is about to change. But that kind of a play would be very, very dependent on these heat map orders staying here, getting filled, holding price at that level, and then we continue on from there. So I want to layer this into some other assets to see if we can get an idea of the same thing potentially happening anywhere else. So let's go and have a look at Bitcoin. With Bitcoin, we didn't have anywhere near as much manipulation going on. So Ethereum really gave us the heads up on this one. There's almost nothing all that significant happening on Bitcoin other than these high level shorts are gone now. That was sitting there for a really long time at $70,000. You can see the red, how far back it goes, but they're gone now. So whoever was waiting to short Bitcoin at 70,000, they're not interested anymore. They've pulled it. We also used to have one at 73.2. That one is still there. So if Bitcoin happens to be fairly bullish, 73.2 is going to be probably I would say a final target of a trend, definitely not a level 1 target or anything like that. But if this turns out to be the false move breakout to the upside, and actually Bitcoin consolidated a lot this weekend, so we'll have a look at that on a chart in a second. But if this ends up being the false move to the upside, which would be designed to stop out anyone who shorted in this consolidation, then the follow through should be to the downside, which would mean that the target is likely to be this level at 65,500. So we really have a few things to look out for. Let's have a look at the Bitcoin chart. So this here is the weekend price action on Bitcoin. What I'm finding quite interesting is that there was 2 attempts to trap shorts already down here. So we had this one at the very start of the weekend, and we had this one usually where we kind of expect it, sort of typical there. But the rest of the time, we remained in this weekend trap, and only just now we've had this breakout to the upside. The fact that they've trapped shorts here, that's kind of positive to me, and then broken out to the upside. Okay, if this is going to continue up, I've marked all of these liquidation levels above price, which again, I got from HighBlock. We have a look here, you can see that on Bitcoin here, there is a lot of liquidity above price. There is one fairly decent spike below price, which is sitting at 66,435. But other than that, there's major liquidity above price, and there's a fair few different targets all the way up to 69,935. So when we have a look at Bitcoin then, 69,935 is going to be back up here. And that big blue line right there, that's that level that I was talking about. So this is Bitcoin's current retail pattern, okay? The descending triangle, that spike up is still at this point create a lower high on the 1 hour time frame. So just be very careful about it. Now that we know where we are, we go down to the 15-minute time frame, and these are the 2 scenarios now. Can we see buy orders on Bitcoin? No, it's very empty books right here. So the moral of the story with Bitcoin is, if it turns out to be true that these 2 moves down here to the downside were designed to trigger short orders, but also stop out any longs in this consolidation right here, then what that should mean is that the shorts are trapped and price is going up. If that were to happen, what we need to see now, we have this initial break. Mind you, that has already stopped out many 100x traders, okay? So the damage might already be done. If there is more damage to do and they want to come for these higher levels of liquidity, which there is a lot above price, but there's equally a lot below price, especially down to the trading light long orders that we currently have, then what's going to happen from this point on is price will retrace a little bit. It will cover some of this green vector here. It will likely hold the 50 EMA or 200 EMA. And that's when you look for bullish candlestick formations, and you would expect that, okay, that's just a retracement. It's going to go up for the higher levels of liquidity. And that would be an area that you can open a long position. If the damage is done, which is also equally as highly likely right now, there is not enough price action to be definitive, then what will happen from here is price will come down as it's doing right now. So it will come back through this retracement, and it will create a lower high, which will end up looking like an M. And that would give you more confidence that we're coming down for the lower liquidity and those lower trading light heat map orders. What you want to see to be confident about that is price inability to return to this red vector on the 15-minute time frame. Okay, so that becomes your area of interest. It can wick into it, but you don't want to see full candle closes too much into it unless they're like an inverted hammer or railroad track or some sort of bearish candlestick formation. may not get back in there at all. But the easiest trade to get is if it does reattempt that level after it pulls away and we see weakness. So that's what you would be looking for to open a short position on Bitcoin with quite a decent target at those trading light orders. What you're looking for the long position is price comes back at around the EMAs. It gives you really bullish candlesticks, hammers, railroad tracks again, star formations, things like that. Then you get the confidence that the false move is already in. We're retracing and we're moving up to get the upper liquidity next. Now, I want to take a look at Solana, but before I do that, guys, we've created a team for the Bitget KCGI competition, and you should want to be part of it because these competitions are one of the rare times that we open up our Discord and our trade alerts for all users, and it's a really fun time. We trade together as a community. It's a really good learning experience to see what we're thinking and what trades we're thinking to enter. So there's 4 days till the competition starts. All you need to do is create an account under Bitget using the link down below. That link does get you 20% trading fee discount for life. Then join our team. Also, the link is down below. And finally, jump in the Discord. The directions to do all of that are clearly laid out in the description of this video. So just have a read of that. And now let's talk about this Solana liquidity. Now with Solana, there is a lot of liquidity above price, but there is a couple of levels below here, 3 rather decent levels at 163.5, 162 and 160. If they wanted to move to the downside to collect that first before moving up, I don't have an issue with that at all. And I'm going to show you why, because it's on a higher time frame. So let's have a look at Solana 4-hour time frame. And this is why. When we zoom out on Solana on the 4-hour time frame, we can see the W formation. We can see 1 rise, retrace, 2 rise, retrace. That retrace is creating yet another descending triangle. And so therefore, technically, we should be expecting a level 3 rise on Solana. We also do currently have trap traders around the 200 EMA. And if it did come back to that 160 to 163 level, that's going to be around the 200 EMA. So I don't actually mind if Solana pulls back a little bit more, but it holds the bottom of this level here, or it holds the 4-hour 200 EMA, then that's where I would drop down to a smaller time frame to look for some bullish confirmation. Again, 15-minute, 5-minute, 1 hour even. Then I would expect that it's actually going to break out next and give me the 4-hour rise level 3. What would invalidate that would be if it broke below the 200 EMA, came back to retest it, gave me a lower high, then I would say, okay, now this descending triangle is going to break to the downside, in which case there's still a decent target if it does break to the downside. So I think Solana is a good trade either way. You're either waiting for a break and retest of the 200 EMA, or you're waiting for smaller time frame bullish candlestick formations in this trap trader zone between the 160 to 163. Yeah, it's one or the other. And if you are wanting to learn this whole method in full, check out our website. The link is in the description down below. Give you the details of all of our courses, community, and everything else that we offer. Whilst you're there, check out Bitget as well, and don't forget to join the competition. I hope you enjoyed this rapid fire TA update, and if you did, be sure to smash that like button and hit subscribe if you're not already subscribed, so that you can be notified every time I post a new video. Have an amazing Sunday, and see you guys, I don't know, soon.